All right. Hello, everyone, and welcome to this episode of 22 Minutes with Jayson and Stefan. Today is Thursday, October 27th, 2016. We've been doing this now for
years.
Feels like years, right?
Months,
weeks, days, hours.
We've been doing it for a few weeks.
Yeah, I think this is like our third week here. So thank you for joining us. If you're watching us on Facebook, please, as I say each and every episode, please like our page, share with your friends and family, and certainly we would love the opportunity to earn your business if you're looking to buy, sell, or refinance a property right here in Phoenix, Arizona.
I think our production value has gone up every week.
It has. I think so.
Yeah, you got fun stuff, not funny, but fun stuff behind you that wasn't there last week.
Yeah, the spinning globe, and I'm gonna change that up. I'll probably put some Arizona stuff on there. That was just kind of an experiment kind of thing, but I'll end up putting some pictures of Arizona behind us, Phoenix, and stuff like that, and kind of.
So if you like us this week, you're gonna love us next week.
Right. That's right. All right, so we're trying a new thing here. We're trying Periscope. I'm trying that. That's why I'm looking down here. I'm checking out my Periscope. I'm not on, so I'm obviously doing something wrong, but we will be on Periscope. So if you're watching the replay on this on YouTube or something like that, give us that thumbs up, obviously subscribe, but you can also check us out on Periscope as well as Facebook too. All right. So this is Throwback Thursday.
Yes.
Throwback Thursday. So throwback.
Throw us a question, we throw it back.
That's it. That's exactly right. Throw us a question, throw it back. Now, if you want to reach out to us obviously on Facebook, you can message us directly from Facebook on our Facebook page. If you're on Twitter, you can hashtag 22minutesAZ. We will certainly get to your question and answer it. Or if you got comments or something you'd like to share about the show, we would love to hear from you. Now, before we get into Throwback Thursday, I want to put in the tweet quote of the day. We kind of started this week. I don't know if it's a good thing or not, but it's motivational, and who doesn't need to be motivated in today's world, right? Day and age.
Well, I'll tell you if it's a good thing after this tweet.
All right.
I'll tell you my opinion.
All right. All right. So today's tweet quote of the day comes from Aristotle, and it says, There is only one way to avoid criticism. Do nothing, say nothing, and be nothing. Now, I thought this quote was pretty appropriate for today because we are doing something that many people are not, and that's live streaming and trying to bring valuable content to you to help you with your home purchase or home sale or whatever it is you're looking to try to do in real estate here in Phoenix. So we're doing something, and we know we're going to be criticized a little bit, but hey, I got tough skin. I really don't care.
I see you.
So we're going to continue doing it, but if you got comments, please reach out to us. We'd love to hear them, good, bad, or indifferent.
All right. I like that. Now I can agree that the quote of the day is a good thing, or the tweet of the day.
Exactly.
He tweeted that out, right? He had like maybe 1,000 followers or something on his Twitter.
and those 1,000 followers were across the globe because there weren't many people on the globe.
Right. There's a large population. 1,000 was a lot of people back then.
That was a lot of people.
Like $1,000 was a lot back then too.
Right. Okay, so let's. I'll go first, if you don't mind.
Sure.
So I've been asked here the past week. Obviously, we have the elections going on. We have a lot of things kind of going on outside of real estate as a nation. And one of the questions I'm getting, what are rates going to do? What are rates? Or I want to refinance before rates increase because of the election. And so I wanted to kind of address this a little bit. And let everybody know that this isn't necessarily, the election is not necessarily tied to interest rates, or interest rates aren't necessarily tied to the election, vice versa. So Freddie Mac has come out and said earlier in the year that interest rates weren't going to go anywhere through the end of the year. Now, that doesn't mean that interest rates wouldn't kind of bounce up and down as they have over the past, 6-8 months. They have kind of bounced around a little bit. But they're not going to go up anything dramatic anytime soon.
And where are we at today on October 27th? What are we looking at for a range?
Well, you're in the mid to low threes on an FHA, and on a conventional, you're in the high threes
Okay.
on a conventional loan. So rates historically very very good. And so, but the thing that I want to kind of make mention here, and the reason I say that I don't think rates are going anywhere anytime soon, regardless of what even Freddie Mac or Fannie Mae or anybody said, I just think the economy is not in a position. This is of my opinion, and it really doesn't mean anything. I'm not an economist. I just observe and talk to people on a daily basis. I don't think rates can go up because I don't think our economy can absorb the additional cost. We're being squeezed everywhere as citizens. We just heard what this week it broke the Obamacare and the premiums going up for Obamacare. Arizona going up. I saw one report 145% in that cost.
It's amazing. 25% is what we just read too. I don't want to get into the political stance, but yes,
Right.
it's not good.
Yeah, no, it's not good. And so, because of these squeezes that we're feeling in other areas of our lives, I just don't think that interest rates can afford to go up. Now, luckily, the global economy isn't very strong either. So, inflation is held at check right now. So,
Right.
we're doing better than most, right, as far as the global economy goes. And that's keeping inflation down. Therefore, we can afford to have interest rates as low as they are for as long as they've been this low. So,
I think the caveat to it and why people are concerned is because Trump even says that these rates should have gone up a long time ago. I think on the second debate or maybe the first one, he's saying there's no reason for us to be this low. We should be bounced up to where we need to be. And
right.
it's not helping the economy. So that's his stance on it. So if we talk about who becomes president, and um, or when, we're talking about like January anyway, right? So when you're saying by the end of the year, you're right, but it does take like 30 days to refinance. So if we start at November 15th, the rates are going to be the same, or December 15th, the rates are going to be the same. Um, and anything the new president decides, or whatever fiscally they decide is best for the country, it's not going to go into effect in January 1st anyway.
Right.
If anything, it has to go through the Senate, they're all transitioning in and out. Has I think, right? I don't know. Maybe the federal stuff just gets done. The federal interest rate and the
Yeah.
economy.
Obviously, policy and things like that. The president can, put in a policy, not really put in a policy, but kind of offer a policy. It still has to go through the House. Still has to go through a lot of things. Trump has made it pretty clear that he wants to get rid of Dodd-Frank, or at least a big portion of Dodd-Frank. A lot of people in our industry like that idea because there are a lot of things that really constrain or hold lenders back from offering new programs and things like that would help boost the economy and help more homeowners become, or more people become homeowners. But because of the Dodd-Frank, it kind of restricts things. And as we get more homeowners, then interest rates will kind of adjust accordingly. So we'll see what happens. And this isn't a political show by any stretch of the imagination. But I don't. I don't.
Watch yesterday's episode if you think
Yeah,
this
right.
is
It's not politically correct, that's for sure.
oh,
I don't even think in the first quarter of next year. I don't. Once we finally, it's not like it's going to happen overnight. Somebody's not going to snap their finger and say, "Okay, now rates are 5%."
right.
That's just not going to happen. It's going to take a process. So
And I'm not the lender here on this side, but here's what I've been telling my clients. Anybody that calls in and asks me about interest rates, I say, well, do you think they're going to go higher? Or do you think they're going to go lower? Or do you think they're going to stay the same? Not one of them thinks they're going to go lower. So if you're at 4 or 5%, go ahead and get refinanced today. Get refinanced. I say get refinanced. The sooner you get refinanced, the better for you, because I don't know if it goes lower. We're talking like a quarter of a point or eighth of a point. I don't know how much lower it can go. Can you agree on that?
yeah, no, I mean, I just looked at some rates yesterday in low threes. I think the best that we saw in 2011, I think it was, or maybe it was 2010, when rates were really, really low. I mean, everybody's like, "Oh my God!" I mean, the Fed funds rate was at zero or whatever,
Right.
and Europe has some of their interest rates at a negative right now. And the best we saw was at three and a quarter. I think was the best that we saw at that time. Some people
Right.
got 299 or something like that. So I don't think they can get much better than what they are right now. And remember, the Fed did raise the Fed funds rate. I think about 6 months ago, the last time that they met.
Right.
And it didn't really do much to long-term interest rates, mortgage rates. So again, there's a bigger picture here, and that is the economy. And until the economy and people start getting raises, that's a key component to this whole thing is people getting raises. And I spoke to one of my clients on Wednesday, and she said, "Yeah, our company gave a modest 1 to 2% raise." I
Right.
said, "That barely covers your health care." She's like, "Yeah, I know." So companies aren't willing to give raises just yet. Therefore, that's holding things back. And until they start doing that, there was a report, I think, last month or the month before, where a lot of politicians kind of jumped on it, saying that companies are starting to hire more employees and are starting to give raises. But it was very one-sided, that report, because not everybody's getting raises. That's for sure.
Right. Right. Not me.
Yeah, not me either. Okay, so that was kind of I guess the long story here on that. What do you got for me?
But I just want to throw a summary. If you're in the fours or in the fives, because there's some people I talked to last week, they're in the fives still.
Yeah.
It still get refinanced as soon as possible. I would say just to save your money, not worried about will the rates go back up. Let's do it while it's good. That's what I say.
Yeah. And I'll just to add to that, I spoke to a gentleman yesterday who his loan is with a Fannie Mae. He's trying to do a HARP loan. He's upside down by 40,000, and there are still a lot of people that are upside down on their mortgages out there. A lot of people, a lot more than what we would think. And he is trying to refinance under the HARP refinance program.
Yeah.
He's in the yeah, and he's in the fives on that. The other lady that I spoke to, the other client that I spoke to, she's in the five, or she's at 4.75 as an interest rate, and wanting to refinance right now. So there are a lot of people out there who are at high interest rates. You're absolutely right, Stefan. Now's the time to refinance if you haven't already.
Right. So my turn for the question that I got.
Yes.
Actually, I got it Friday, so it's almost a full weekend. It has to do with solar panels. A deal fell apart. Not my deal, not my buyer, not my seller, but after it fell apart, they came to me.
Yep.
And I went through their stuff. The question they have is, because they're the sellers, why wouldn't they qualify, or how can we get them to qualify for this? Or, is this a burden? We were told this is an asset, this solar panels. So a solar panel lease, to answer this question, if you have a solar panel lease, it helps you, the owner. It doesn't help your resale value. It doesn't help market the house any better or raise the value of the house. It decreases your energy costs. And that's the asset you have, kind of like having a house that already has a dog house in the backyard. If you have a dog, it's kind of convenient for you.
Mm-hmm.
It doesn't add any value. In that sense, sorry. I must be getting really serious if I'm coughing. Real legit stuff. But if it's so theirs is like $137 a month. So what happens is, if you're an FHA buyer, you qualify for a loan for, let's say, $200K. Now that you look at this lease house, it's a good deal. It's a beautiful house. It's at $200. Your lender might, and I think it has to go through underwriting. They have to count that $137 on top of the payment. So if you qualify for $200, you might not qualify for $200 plus $137, even though that's an energy cost that if you didn't have the solar panels, you'd be paying it outside anyway, part of living. But if it's attached to a lease agreement, then you have to qualify for that extra $137, which is about maybe a $220 or $215K pre-qual, really.
Right.
Then the other thing is, the other question I had was, how do we overcome it? Well, they have a prepayment. You can prepay it off. Sometimes it's $5,000, sometimes it's $10,000. If you get the value of the home to appraise at $205, they offer at $200. You can use that $5,000. You can go up to $205, maybe pay that $5,000 towards the balance, and maybe the buyer and the seller agree to just pay off the lease agreement. Now that's a big win. There's no monthly bill, and you're saving $100, $200 a month on your energy costs. That's an option that doesn't get discussed enough, because there's a prepay. And the third option here is to transfer. You can move the solar panels with you. So they're not affixed to
Yeah.
the house, and some people don't even think about that option. Oh, I can move them to my next house. Well, why not? If you liked them at this house, you can get it approved for the next house. Move it to that one. That way, you relieve. The idea here is to relieve the burden or the toughness of selling the house for 200 with $137 a month lease agreement.
Right. Yeah, solar has been one of these things. Lenders, we as lenders, we haven't really fully adopted solar. Obviously, the sale point being that you save a lot on your electric bill, and we know here as Phoenicians, your electric bill can get out of control, especially in the summer. So solar is very, very attractive. Energy efficiency is a big deal, and solar being a part of that. But lenders and HUD in particular, we're a small little entity of that industry,
Right.
if you will. And so HUD and Fannie Mae, Freddie Mac haven't fully adopted some guidelines that would make solar a little more attractive to, as a proponent to sell your property, I guess.
Right.
So there are certain qualifications that you do have to meet if you're going to purchase a home with solar, and that is you just have to absorb the lease payment on that. So
Sometimes there's a credit
like you
score
mentioned,
requirement that's higher than the credit score requirement for an FHA loan.
yeah,
The other thing is, you and I talked about this off camera a little bit, but go conventional if you can.
yeah. If you can go conventional, then you don't have some of these restrictions. So there are options. You just got to get with a lender and a realtor who know and who have had some experience with the solar and what it means. Because I've seen it before where realtors, sell the property or show their buyer a property with solar. And we as the lender, we don't see the property. So we don't see it until we get something
Right.
from the appraisal, right? We don't see the home inspection. And by then you're so knee deep into the transaction that you are really risking losing earnest money and some other things, key components to the property, or to the investment, if you will.
You, I think, well, to piggyback that, I don't know if you lose the earnest because then you don't qualify for the loan anymore. If you don't qualify for the loan, because in the purchase could say you have to qualify for the loan, there's a
Right.
loan contingency. But what you do lose is the inspection cost, about 250 to 275, maybe
Yeah.
300 if there's a pool.
Right.
You lose the $65 for the termite inspection,
Right.
and you lose the 450 for the appraisal, which is about $800 gone. Now you might get that $1,000 earnest back, and you should get that back if you don't qualify. But you can overcome that if you are ahead of the game. And so, just to back to the whole scenario of this house, I read the description. I read the private remarks for the other realtors. Not one talk about solar panels. In fact, it was the description was a beautiful 3-bedroom, 2-bath house, move-in ready.
Nothing about solar panels.
Oh, nothing about the neighborhood. Nothing.
Yeah.
I mean,
Nothing. Yeah.
yeah, tell me a little bit about the house. Why
Right.
do I want to look at it? The photos weren't professionally taken, so the realtor didn't do their client a service. They did a disservice. And in the semi-private marks and the private marks, no talk about, hey, let your client know that they need to qualify if they're FHA.
And see, isn't that I've spoken about that on certain things that I do, my podcast or whatever, and I know I've spoken about it with you. It used to be what, 20% of the agents doing 80% of the business. Now it's probably 10% of the agents doing 90% of the business.
Yeah,
And there's just a level of professionalism. Just because you have the name realtor, or have that title doesn't mean you're a good realtor. So there obviously are some bad realtors out there, unfortunately.
so ask them how many times have they sold a house with a solar panel. If you have, just ask you can Google, there's this thing called HomeSnap,
Yep.
which is an app that shows how many transactions your realtor has done in the last 24 months, to just get a good idea who they are and what kind of experience they have. I recommend, if you're going to look at somebody, feel free to look at me as an example, but look at what they have and what they don't have, because, and I know we're running out of time. We had a couple more questions too, but are you frozen or are you just looking down?
No, I'm looking down. Sorry, buddy.
That's funny. The other day I was frozen out like this, remember?
Yeah, I know. Or like
But,
this.
Yeah, right. It's only funny if you do. But the the point I was making was that when you talk to your realtor, make sure that they know what they're doing. I think we compared it to knee surgery is what I usually compare it to. If you're going to get your knee surgery done, we can agree that that's a big deal. We can agree that knee surgery is probably one of the biggest stuff you'll do. Same with buying apples to apples, but it's severity to severity. Would you go to your cousin who just got their medical license? Maybe he's done one or two of these knee surgeries, and you're just trying to help him out, toss him a bone, or would you go to the doctor that's done 50 to 80 of these last year alone? That's
Right.
pretty good at what they're doing, and they're pretty well established. Now, knee surgery and buying a house are totally different because you'll have a limp for the rest of your life. But does your family friend or your realtor that does 3 transactions, do they have what it takes to protect you? Do they have what it takes to help you out and save you money?
Yeah, exactly. Exactly right. I mean, you need the right people in your team, and we feel that we are the right people that would be
Right.
or would love to be a part of your team. So if you would, I guess, or could reach out to us, we'd love the opportunity to earn your business. You can do that, as I say, each and every episode. You can visit our Facebook page, 22 Minutes with Jayson and Stefan, and message us from there. Like our page, share it with friends and family.